role and understood. I know that there's a lot of new people in here, so hello to you guys. Thank you for stopping by. Um, Matt, I'm that guy. I'm just being the recording chat guy. So I don't know if you're recording currently,
Oh
but
yeah, yeah. No, I was gonna record too for just a backup copy, just in case.
perfect. So if you can record, that'd be great because my OBS today has been exploding. So
Yeah, I got it recorded right now.
perfect. All right. Well, gents,
So,
here we go.
thank you guys for all joining. I'm really excited for this, and again, like, hats off to Two Degrees and Josh and the whole team over here. They really took my eyeballs and legitimately put it on the charts. Like, it's pretty. It's. I'd never really thought that this could actually happen. Like when we were going over the talks of it, like I didn't believe that we could actually automate something as mechanical as my approach, but I was completely fucking wrong because now it's legitimately everything that I do is now on the charts. But I'm going to go over 5 examples and I'm going to do like if you guys have seen my YouTube videos, exactly like what I do there, I'm going to do it here. But when you start off and you have the indicator on your chart, you're going to have this blank, like this little box here at the top. It's going to say forever model, and then it's going to show you your time frame alignment, but the time frame that you're going to be on is going to be the lower aligned time frame where it's going to show the execution. So I'm on the daily chart. So if I'm looking at the daily, the model's going to pull from a monthly key level. So it's 1 day to 1 month. And then I have the bias, it's neutral. So the model and the indicator will pull both bullish and bearish setups. But like in this case, I'm looking at a bearish sentiment on indices. Like this was a trade that I took it was on Tuesday from this daily bearish fair value gap that we had here. We had SMT at the tag with the S&P 500 tagging it and the Nasdaq failing. So this was the analysis going in to that key level, just like this. And I'll show you like what it looks like on the lower aligned time frame on the hourly in just a second. But if we're bearish and we're looking for lower prices, I'm gonna hit this button here and I'm gonna look for the bias section. I'm gonna click bearish so that the model only pulls short setups. That's what I'm gonna be looking at. And then also for the other people that are confused, like time frame alignment, these are all the sections. So like we have every single one that I use. I don't really use the 15 minutes to one, but you can for the people that want to. The 1 hour for a key level to an M5 market maker model, 4 hour to M15, daily to 1 hour, weekly to 4 hour, monthly to daily. Like everything that I use is here and literally at your exposure. And if you have like custom preferences for other time frame alignment that you have found that works, you could input it and you could do that. And then all this other stuff is pretty much customization as to how you want the fair value gap to look, the SMT, the sweep, the order block, all that sort of stuff. And then this is the time zones where I'm looking for the trades. I'm not trading London, but this is for the people that are trading London during just the kill zones. This is the New York AM session, the PM session, and then you have Asia session as well. So everything in regards to time is covered there. So in this trade that I was looking for on Tuesday, when we had our daily to 1 hour, I'm going to go to the 1 hour from this daily setup. And you're going to see what pulls on both. Now here, let me actually remove this. So here. Boom. And here as well. So you can see that daily gap that forms right there. If I hover over it, it shows me the daily gap that's pulled on the NASDAQ. Gives you the high, the CE, and the low, and the time frame. So this is when it gets pretty cool here. And I'm going to delete this, just my analysis. This is the SMT set here. This is the SMT set here. So as long as that's set in place, I'm good to go and still looking for the trade. Play out price a little bit. What do we do just here? On this down close candle right here, we close below this up close candle's opening price. Watch what happens on the next candle. The second that we get the tag of that candle that ran the short-term high here, confirming the order block we tag in, the model picks up and indicates the identification of the order block and the entry function. Now, since this is in bar replay, you can set alerts for when this is set in place. And two degrees, correct me if I'm wrong, it's when price creates the SMT at the fair value gap, and also when it tags the order block that runs a short-term high, short-term low, and closes below or above it.
Correct. There's two alerts. The first one is when we're tagging the fair value gap with SMT. So you're gonna get basically like there's a potential forever model happening on this time frame for this time frame alignment, and then there's a second alert the moment that the change in state of delivery is confirmed. So this is actually a good example on the left on Nasdaq on your chart, because the change in state of delivery there is just occurring. So the indicator will not display anything until we go to the next candle. So at the
Exactly.
open of the candle after, you're gonna get an alert to say like forever model is active. But by now you already have an alert that says that there's a potential one forming.
Exactly. So we had the short-term high run here, and we had the confirmation here with the next down close candle tagging us in there with your target for the 1 to 2 risk to reward at 5095.75, and then you hover over the order block symbol, shows you the time of the order block, the opening price of it for your entry, and the invalidation point covering the entire price of that candle. But obviously, if you wanted to stretch the invalidation point of the order block, you can still put your stop loss above the SMT high, and I've said that before. Now let me go to the next one on the NASDAQ. You can see the only candle that ran the short-term high for a position opening would be this one here, because it runs this swing high. This one does not, only this one. So therefore, you have the confirmation of that order block. But you can see on that next hourly candle here, we actually ran the 1 to 2 risk to reward on the S&P 500. And that was the trade that I took on that Tuesday, which literally played out picture perfect. Like, my exact analysis that I would do from the daily, going like this, daily fair value gap, take my high at previous days, map that out. I go to the hourly chart. It's literally the same shit. This high, my gap's here, my SMT line is there. It's fully automated. It's literally the same exact approach. And
Such a gorgeous example too.
it was crazy. Like, literally, when I got the alert on my phone while I'm at the gym, like, I'm sitting on a bench press and I'm just like, I get a dink, and ES tags like 5080, and then I look at my phone, I get right back on, and I just start cranking more because I'm like so excited the fact that this worked. I'm like, wow, this is insane. But when you're trading in a trend, and you could tell that price is clearly in bearish sentiment, bearish order flow, change the bias to only looking for short setups, and vice versa. If price is clearly in an uptrend, only look and trade for bullish setups, and you'll trade and you'll fix that on the next slide. I'll show you here for Euro USD. But this was the one trade that I took from Tuesday. But
Before you move on to Euro, there's a question in the chat about the difference and why the two OBs are different. And I just want to answer that quickly. So you'll
go ahead.
notice that there's a little bit of a dotted line that showcases basically like the rate of a swing. So on NQ, we rated that smaller swing, and then we formed SMT. That is the last swing high that gets rated. So that is the qualifications. Whereas on ES, we actually rate the other high, which causes SMT. So the order block is a little bit higher in that case.
Yeah, I gotta zoom in closely. You could, like, if I zoom in close, you could see that this candle high is higher than this. So that's the run of the short-term high. My order block qualifications will always be candles that run short-term highs or short-term lows. If we run a short-term high or a short-term low and then we close above or below it, that qualifies my high probability order block. I don't just use random down close or up close candles in a swing and qualify those as order blocks, because then there would be just way too many to count. These specific PD arrays do specific things in the price delivery, which is exactly why I have these specifications. That's the true definition of a high probability order block. Pairing it with SMT2, it's game over. Am I cool to go to the next?
Absolutely, yeah, yeah. While you switch, I'm just gonna say what I was talking about in chat. Someone asked if you can do two SMT pairs at once, not in one indicator, but if you had two instances of the indicator. So let's say you're running Q and you track like ES, NYM, just add two indicators, change the pairing on those, and then you can follow both SMTs. So it's a little bit experimental and not the way that Matt trades it, but if it fits your style, then by all means do that.
I don't know if people caught this trade in the chat yesterday, but it was unfortunate because for the people that trade Forex futures, Tradeovate was actually suspending Forex futures for yesterday because there was like an exploit that JCap tweeted out and something happened in regards to them making some sort of fix or bug. But I couldn't actually take this trade because it was saying order rejected on my broker. So other people that had like CFD prop or if they took it on personal were able to capitalize on this. And I got the tags from Twitter, like everyone was taking this. But the same thing from ES and the NASDAQ, like we're looking for unmitigated fair value gap here. And we know that dollar's been bearish, euro and pound bullish, majors bullish. So the bias flipped here will be bullish, looking for longs on majors if dollar is bearish. Now there was an hourly bullish fair value gap tag on the pound here. And you could tell and see that with this hourly gap, there was SMT at the tag. Made a lower low here while euro makes the higher low like that. So higher low, lower low. SMT divergence, step 1 and 2. Now you just go to the align lower time frame, which would be the 5-minute, to see if there was a trade setup happening at this time. And if I flip to the 5-minute on euro and the pound, you can see where this is pulling everything. Now I'm going to replay price and go back to right here. So this is the fair value gap that I had marked off 1 hour with the CE, the low, the high, and the time frame. And this is the SMT pulled right there. Now, euro already gave that entry, as you can see from the indicator, with the higher low here, with the 1 to 2, and the order block running a short-term low, closing above it, tagging in there, and then playing out price from here. Now watch the pound on the right and see how the indicator changes as the next candles go. Right there, we confirm this down close candle that stands out because it runs liquidity, short-term low. Confirmed order block is set in right there. The fair value gap is dragged out. The SMT is set in right there. At that same time, we run this external high on the euro, and that marks off a little plus sign too. So when you run an hourly external high on that higher line time frame, it's going to give you a little indication showing you that it's reached a liquidity pool. So I'm going to keep playing out price and show you what happens on the pound. And also, when we reach that 1 to 2 risk to reward, this is the diamond that shows up on the euro completing that 1 to 2 from that order block tag. But watch what happens on pound. This was literally so clean. Tag it right there. The wick does the damage. The bodies tell the story. Sensitive area and price delivery. We tag right there. I couldn't take this trade, unfortunately, because my orders were getting rejected on Tradeovate. But this truly was an absolute beauty of a trade.
It was gorgeous.
Right there. And look how when prayer, let me go back right here just so it keeps the ERL there. But that was the trade on the euro from a 1 hour to a 5-minute perspective that a lot of people actually caught. Like my notifications were exploding on Twitter. But these specific specifications, if you guys were also here when I did my intro to like understanding what my forever model is, this is it. Like my analysis matches exactly on here. Like I go to the 1 hour on GBP. We have the fair value gap. I do my own little annotations. The SMT set in here. Step 1, step 2, marked off. Go to the align lower time frame. Let's go check and see. Fair value gap, same thing that marks off. SMT, same thing that marks off. I can literally delete this and it just did the work for me. It's exactly the same. Exactly the same. And I never would have thought that this would actually happen, but it is. Right in front of my eyes. Down close candle, big body, runs a short-term low, creates the SMT inside of the fair value gap. We close above it. Price comes back down, tags that opening price, gives it a little kiss and go. 1 to 2 risks to reward. You could leave runners to the external range, buy side liquidity pool. Shows you the price of that. Shows you the price of the 1 to 2. It's literally picture perfect. I have an entire video on my YouTube channel. It's like 50 minutes long breaking down my forever model if you want a more in-depth look of the strategy. Also, like I have a million trade breakdowns too. And then look what happens. Price reaches the external range liquidity pool and done. So nice. Like
This was great.
yeah, this example, it's the exact, like if I could literally just, the exact same example here. Like if I invert this chart, this same setup looks exactly like this. The exact same thing. Take this, paste it here, it's the exact same approach. SMT, short-term high run into it, drop. Like literally, it's always going to be a copy and paste because consistency of the same sort of mechanics will gain confidence in your executions. And that's what I always push in regards to my trading because I want everything to be replicated and I want everything to look identical. I don't want to go into one day looking for this sort of model and then the next day looking for this sort of strategy. I want to look for the same thing every single day, every single week, and I don't want to change that strategy ever in my life.
So happy, bro.
Yeah. Go for a chart on today on NASDAQ. I'm good. Bro, there's no shot that I'm going on NASDAQ for today. Today was a barcode. Let's do another one. I mean, I hope this was pretty clear. But like it literally just doesn't get better than this. And I'm extremely happy with how this
100%.
whole thing played out. But there was another one that people caught today on the same sort of ideology behind what we just showed. This was also euro and the pound from an hourly bullish fair value gap. Create the SMT. Now we look, what do we have here? It's an hourly gap here. We have an hourly gap here. We have SMT at that hourly gap. Higher low here. Lower low here. Step 1, step 2, marked off. After we have step 1 and 2 marked off, what do? Go to the align lower time frame. Look for the change in save delivery. Short-term low run. We have our bias, bullish. All we need to do is see if the setup can offer and give us what we need. Now let's go to the 5-minute here. And play out price. And here is euro matching the same exact analysis that we had listed on the hourly. We had the SMT marked off. We have the hourly gap resting right here. And then if you look closely, we have a short-term low from 7:45, our kill zone for Forex. I'm looking for trades past 8 a.m. Eastern Standard Time. So it's only going to be pulling stuff past this time, past 8 o'clock. Anything that happens before, I'm not looking at it. Not looking at it. So this was the order block, runs a short-term low. We close above it during our kill zone. So your execution would have been on this down close candle from 820. Your risk to reward or your target would be 1.14077. And then just watch, play out price. Look and see how the bodies are respecting and also the mean threshold of the order block. Play it out. And just like that, the 1 to 2 risk to reward is hit during the kill zone. During the kill zone. And in this situation, it's either you put your primary stop loss location would be below the candle that runs the short-term low, or if you want to do a little bit deeper, you could put your stop loss at the low where the SMT is. So if the SMT is neglected or taken out, then you would know that price would most likely be reversing and going against you. But 99% of the time, the order block that we're going to be utilizing will be relatively close to where the SMT is placed. So that order block of your entry, if you just put your stop loss at the low of it, of that candle that runs the short-term low, that will be a great stop loss placement. But another
And again,
picture
the
here.
the like the standard, let's say, or like the model's base idea is that since that's an order block, we shouldn't even trade back to the swing that was rated. So
Exactly.
if anyone hovers over the little label of the order block, there is going to be an invalidation of that specific order block. But as Matt just said, you can kind of fit it to your own strategy too. Just remember that that order block projection is based on the specific prices that are listed inside of the OB tooltip, just that Matt is showing right now. So
Exactly.
that 2R will be an actual 2R if you measure it from the
From
opening price of the order block to that swing.
exactly. Yep. Because my entries it'll be like this. Like entry at the opening price, stop loss, low, 1 to 2 risk to reward, right there. So that entire candle, once we close above it, we should not be taking out this low. Target a 1 to 2 risk to reward. And then if you want to, you can either go break even and leave the remaining runner to the external range high. That is the picture perfect example of exactly a copy and paste strategy. Someone said, does it print on the 1 minute? Yeah, it does. So like you would use, it's like, so if I go like this and I do my time frame alignment, I can click 15 minute to 1 minute. So if I go and I'm sitting on the 1 minute chart, the indicator will pull from a 15-minute fair value gap that has SMT. So it'll look for 1 minute market maker models that are framed from that 15-minute key level. These are all the time frame alignments. On the right will be the list of where the IRLs are forming, the fair value gaps with SMT. And then on the left is where the model will be showing you its presentation of the execution on the left. So left is where the entries will be. On the right is where the key levels will be that have the fair value gap with the SMT. And then, again, custom, if you have any other things you've back tested that works, you could customize your time frame alignment to your own specifications.
Before we move to the next example, I just want to take a minute to just extend the thanks to the entire team of Toodegrees. I know that it looks like it's only like a few people in here, but from the moderation team to the scouters and to everyone that has worked on this project, it's more than 30 people. So I know that from the outside it looks like a few only, but the reality is that there's a lot more to you know, what it actually is. A lot of them are in here today, so make yourself known. Shout out to all of you guys. This is not would not be as easy without you. So just send some love in the chat for them. Just drop a heart. They work extremely hard and they make sure that everything is in place for you guys to be able to go on the charts. So shout out to them.
Yeah, honestly, like this is like a full blown army, and I don't know, like I could never trust a single other group of people that is this hardworking and this dedicated to making something as perfect as this. Like I said before, like I never would have thought or believed for a second that I could automate something like my model, and here we are, like months later. Like I was in full blown doubt before, and they literally just got in the lab and just started chefing up better than Gordon Ramsay. And
I appreciate you, bro, and I appreciate the trust as well because I know that many people don't really want to give their models away like that, but it's a blessing, and I'm glad we could deliver exactly what you wanted and have it just be truthful most of all.
yeah,
Because
dude, I
as
don't,
long as
this
it
is
respects what it
insane.
is,
It's insane. Like literally, my eyes are on the charts. Like I literally do the analysis, and then it just copies the analysis. It's fucking, it's crazy. Like all of these examples that I showed you is exactly like what it looks like in every single trade breakdown that I put on my YouTube. Just copy and paste every time. Every time.
mission accomplished. Mission accomplished.
Yeah, bro, it's wild. It's literally wild. But this example, does anybody? What the heck just happened to my phone? Sorry. Anybody have questions in regards to this example that I pulled and showed you guys here? Just wondering if this was clear to you guys. Anybody have confusions about it?
Yeah, if you have any questions, just drop it in the chat now. I can kind of
What is that? If
get in there a little bit.
the correlated stronger pair has no fair value gap, but the weaker does, that's still, yeah, you could still, that's still an A plus. All you need for the model to take a trade is one of the assets to have a fair value gap tag that's untapped. And in this situation, there was not a specification, or at least the model was not pulled here. So in this situation, Euro USD was the one that gave our qualifications. And again, like I know a lot of people are probably looking like, why didn't GBP USD pull from this down close candle that ran the short-term low here, and we closed above it, and we tapped in right here? You want to know why? Look at the time. The time was 7:15. My executions that I'm looking for Forex, they're past 8 o'clock. So past 8 o'clock, this was not in my time window for an execution. This was in my time zone for an execution. Past 8 o'clock. So if like for the alerts, if you hover over after clicking this button, hover over the eye, and it'll show you to turn on alerts, follow these steps. Make sure you have alerts toggles on. Find and click on the three dots next to the indicator title, top left of your chart. If I wasn't in bar replay mode, you'll be able to see it. And then you click on add forever model alert. Choose the alert name if you wish, and confirm by clicking create. So like you literally have the step-by-step approach as to how you want to make your alerts when price does what it does for the model. So step by step, hover over the eye, it'll show you. I knew that question was coming from Ghostmaster.
Ghostbuster is Web, but he's Ghostbuster in here for now, for this reason. But let's just say that no comment, but yes.
So you have a neutral bias right there. You see? So the model is going to be pulling both bullish and bearish setups.
Correct. This is why the analysis that Matt does top down is important
Yeah.
because based on the analysis that you do, you're going to be able to determine and input your own bias. If
Mm-hmm.
some of you are familiar with T's model, it's the same thing there. I know a lot of you got used to that. And when you do your analysis before the session in the morning, before the week, whatever that may be, you still do your own analysis. Again, I think Matt said it beautifully in one of the videos that I saw him post. These indicators are not signals. They just automate entirely everything that you need to be looking at so you can just focus on executing and nothing else. So they just remove guesswork. They don't do the work for you. So that's a whole another story, and it's much harder to do full automation stuff. And for someone that has been working in this space for more than almost a decade, it ain't that easy. But just take it as what it is. It automates your analysis and it helps you do it from A to Z. So just trust what you studied, trust the model, but at the end of the day, you're the one pushing the buttons. That's what makes the difference. We can all
Yes.
be analysts, but trader and analyst are two different people. So just be sharp on your own trading.
Yeah. Say that with a loudspeaker for the people in the back.
Absolutely.
But there's this example. For some people, I got tagged in a trade today. This was a very clean one. For people that trade exotic pairs, stuff that's not crossed to the dollar. Um, this was very nice. Also, this is pulling from. So, I mean, I could even just show this. This is EuroCAD on the left and GBP CAD on the right, and it's the exact same approach like always. I'm gonna do a 4 hour to M15, but this is a weekly to a 4 hour. There is a weekly bullish fair value gap resting here. There's a weekly bullish fair value gap resting here on GBP CAD, and you can see already there's SMT at the tag and inside of the fair value gap. There's SMT here inside of the fair value gap. You go to the 4 hour chart. Let me replay price. See how the analysis matches perfectly? My fair value gap, the fair value gap here from the indicator. If I play out price a little bit here, go next, it pulls it immediately. I could delete this, delete that. Shows you the SMT, shows you the fair value gap from the weekly, shows you a short-term low that gets ran right here, and it shows you the weekly external range target right there. Play out price. And when it runs, that weekly external range high creates this little dot, and it still showcases the 1 to 2 risk to reward. But here was a trade that someone told me or tagged me in Twitter. This was absolutely beautiful. There is a 4 hour gap on EuroCAD here that has SMT compared to GBP CAD. And as you can see, this also showcases that one gap is needed compared to both. We have a fair value gap tag here that creates SMT. No gap here, high or low. So that is the A-OK to look for a trade execution. Because when price comes down into these fair value gaps, creates the SMT, inside of here, inside of this tag, there's going to be some sort of manipulation. There's going to be some sort of liquidity sweep creating a confirmed protected low, because SMT will create those protected highs and lows. So I go to the 15-minute chart, like literally picture perfect. Play out price a little bit. Boom. This down close candle tags that 4 hour gap. We create SMT divergence right here with the GBP CAD. Just like this. These things will stick out like sore thumbs. Those exact order blocks always stick out like a sore thumb. 1 to 2 risk to reward with the weekly external range target still shown here. When price comes back into that down close candle that runs liquidity, creates SMT, we come back in, we tap the order block right there. You're in the trade. Your 1 to 2 is resting right here. The reaction from that specific area in price is literally picture perfect. So sensitive, such a good trigger. This confirms strong areas of where you put your stop loss. You'll know where price will go and where price shouldn't go. These POIs are actually insane. And it's so repeatable, and every single chart, it doesn't matter if I'm looking at EuroCAD, GBP-CAD, or if I'm looking at NASDAQ or the S&P 500. This same setup looks exactly like the one on the indices, looks exactly like the one on majors. It literally doesn't matter. All markets move the same and all markets book the same. Literally has no differentiation. Trust me when I say that. Fuck, I just spilled shit everywhere. So if you go for the alerts, hit this, click the alerts tab on, and then hover over the eye, and it will show you how to set the alerts. And you can customize that exactly to your own specifications. I'm actually waiting on Bitcoin. Speaking of that, there's going to be an alert on Bitcoin when Bitcoin closes above this down close candle here. Because there's monthly, I'll go back to that example again, but there's monthly SMT inside of this gap. We go to the daily. The daily has this down close candle that ran the short-term low. So I literally guarantee when price closes above this daily down close candle, it's gonna pick up the model, and then this is gonna be the monthly external range high. Guaranteed. Like literally, will tell you right now. Promise you that.
My bags are very happy you said that.
I'm not even joking with you. When this confirms, I'm unloading the boat.
Not financial advice. Not financial advice.
I said I'm unloading the boat. Yeah. Telling you what I'm doing. But also there's a history button on this tab here, and it'll show you basically all forever models like in chronological order. So like if I toggle like 2, it'll show me like the previous 2 that were en route. Like this. Like if I go back and I'm looking, there's this down close candle here, close above it, tag, boom, 1 to 2, right there, shows that. If I go back, well, wherever the previous setup was placed, but history shows you previous trades that were placed. Or I'm just going to most likely keep it at 0, just so that I can keep myself focused on what's going on in that specific day. But every single example that I've showed you guys so far in this is just the same approach. Fair value gap, SMT divergence, down close or up close candle that runs a short-term high or a short-term low, close above or below it. Once we do that, that's your order block. That's your entry function. Execute at the opening price. Stop loss at the candle high or low. 1 to 2 risk to reward targeted. And I do 1 to 2 risk to rewards because I'm not a greedy person. I was going to say something else, but not greedy. I don't think that. So I was looking at gold this week. Like gold would have pulled perfectly. Let me do another layout here. Let me do this. Go gold here. Okay. And this needs to be SI as its correlated pair. So gold had that weekly bullish fair value gap. This would have been perfect. Like literally would have been perfect for gold and silver. So weekly gap, we had the SMT set in. But if I go to the 4-hour chart, there's no model that's presented. Why? Because if we look very closely, go replay, this was a crazy, crazy edge. What's the one gap? What's the down close candle right now that sticks out like a sore thumb? Here's the weekly gap. This is the SMT. The one candle that sticks out like a sore thumb. Right here. This big down close candle right here. This one needed price to close above for us to then have our order block and our execution. I thought we were going to get it on Tuesday, but we didn't. Rejected. Price on this candle when we were trading during Asia on Tuesday, look at how we closed. I had to zoom in so close for this. Just barely closed above the opening price, so I didn't get my order block confirmation there, so I can't do anything. There's no trade for me. And then, speak of the devil, we literally just pushed up higher on Bitcoin. That's amazing to see. Amazing. Okay, stop. Enough. Stop.
That's hilarious.
Stop. Bitcoin higher. Anyways, the next candle during London, moonshots higher. So this is our confirmation on our order block. You can see we need to get in opening price 32.2. This is where price, if we reach a 1 to 2 risk to reward, the model will not be offered. And look, I could even delete this, delete all that. Shows you the SMT divergence right there. Shows you the fair value gap. Now watch what happens when price keeps going on gold if you left your limits. Because I always go by this and I say, if price reaches a 1 to 2 risk to reward without me getting in, I'm canceling my limits. This is actually a perfect example for me to showcase too. Keep going. Watch what happens here. When we reach a 1 to 2 risk to reward without giving the execution on the trade, it's going to show you this yellow goldish diamond. When that shows you the indication we've reached a 1 to 2, no longer am I looking to get in at this order block. Price is traded too high, and I don't look to trade from this POI again. And then you can see the next 4-hour candles. They run the weekly external range high. That's where it shows that diamond right there. But there was another, like, gold has been outperforming practically every single market. And I'll tell you that, right? Like, gold is just amazing until Toodegrees touches it. But that's a different story.
Yeah, don't even silver, bro. I look at silver, gold crashes. It's crazy.
Like, I think I showcased this last live stream, but this was gold on a weekly chart here, and there was SMT inside of this weekly bullish fair value gap right here. So we had a weekly bullish fair value gap with SMT. I'm going to go to the 4-hour chart and see what's going on inside of this weekly gap with the SMT. So we have the opening of the week on this next 4-hour candle here, right there, opening of the week. Now, this up close candle confirms what? This down close candle here as an order block, and boom, look what happens. Delete this, delete that. The fair value gap is dragged out. we have the short-term low that here gets ran by this down close candle. I took this trade. I think I broke it down on my YouTube channel for the people that are wondering if I took it or not. Yes, I did. Order block is your execution at 2904.7, invalidation at the bottom of the order block 28.75.3, and then this was during Asia session at the open of the week. 1 to 2 risk to reward 2963.5. Play out price. Watch how we treat this POI. Nothing new, nothing different. Literally just simplicity at its finest. And price reaches a 1 to 2. That's exactly what I trade automated.
This example is gross, honestly.
This
Doesn't make sense.
it's
In a good way.
it's amazing. It's amazing.
Just the bodies, it's like change to delivery, and the bodies are like, nope. So good.
Yep. It is a picture perfect thing, but I've found great success in this model primarily from the perspectives listed on this time frame alignment. My bread and butters that you'll always see me trade, like my swing trades will be resting between the weekly to the 4 hour, the daily to the 1 hour. My intraday moves will be looking for trades from the 4 hour to the 15-minute and the 1 hour to M5. I'm not a scalper, or I'm not somebody that's looking to take trades on the 1 minute. It's just not my thing. But this was absolutely great. Oh, I wanted to show them the trade that you caught and you made a video on. It was on NASDAQ and ES.
That one caused me a heart attack, but yeah.
Yeah, that was a great one because I didn't even see. This is a cool thing. I didn't even see the fair value gap that was on the one that you took. I literally had to zoom in with like a microscope to see that gap.
That's why I love alerts, literally.
Like, it was amazing. Like, when did you take that trade? And it was on NASDAQ,
I think it was
right?
it wasn't my birthday, it was on Wednesday. It was at 11 a.m. I think.
Wednesday.
It was before the crazy fucking moves. It was on a 5 minute, 1 hour, I think.
Yeah.
Yeah, it was a
Was
five
it?
minute.
It was this gap here? It was this gap.
Yeah.
Here
Which
it
doesn't
was.
even look like a gap. You're right.
Like, I went into, like, I wasn't even, like, I neglected this completely. Like, I think I was at the gym when this was happening. And seeing this and this chart, like, I'm like, all right, there's nothing here. And I think Nick was like, all right, I think we closed off this 10 a.m. hourly gap. And if you look and zoom in super, super close, like, I couldn't even fit my crosshair between it because of how small it was. This was a legit half a point, practically half a point hourly gap right here. This little guy there. And if I just go back to regular view, I can't even see it. But if you go and you check and compare NQ and ES here, there's SMT at that gap with ES making the higher low. So if I go and I toggle this and I flip to bullish, it shows you the fair value gap here. That small guy that I try to have marked off, but pulls right there. I did
Crazy.
not see that. And then if I play out price even more, it pulls in and it identifies alerts right there. So your execution would be here. Put your stop loss at the invalidation point of the order block. 1 to 2 risk to reward right there. You're tagged in there. And then boom. like that. And he recorded this, and this was awesome.
It
Cause,
was quite
but that's a roller coaster.
it was quite the drawdown.
Mm-hmm. That's a roller coaster.
Probably one of the only good trades I've taken this week, and then forgetting the fact that NQ pumped like 11% and had the most volatile day in history after this. But you know, other than that, that
Yeah,
I thought was crazy. Like in the video, you can even see how the order doesn't get filled because there's just so much shit happening.
yeah, that was nuts. That was nuts. But yeah, I mean that's we did a bunch of examples, did like a lot.
Oh yeah, I mean, if it's not clear by now, with all the examples you've put out before this, then we have a problem.
Yeah, I
So if
mean,
anyone has any other question of any type, of any nature, about the model, about the indicator, about the alerts, we have talked about all this stuff over and over, but not a bother. This is your time to ask. I'm sure we're gonna have other streams in the future where we'll dive into some things a little bit more, but chat, this is your time to shine. We're almost
um,
gone for an hour now, so.
I don't take trade. I like literally like rarely ever take trades on the 1 minute time frame. I used to a lot, but I was inconsistent with it, and I think that my base and my bread and butter is the one time frames that I listed before. Intraday moves, 1 hour to M5, 4 hour to 15 minute swing trade positions, daily to 1 hour, weekly to 4 hour. Those are my best, and I think I'll be consistent with that always. And it's even better the fact that like it will only pull setups during the kill zones. So if you have struggles with taking trades outside of kill zones, this will help you.
I see someone that asked about like this trade not being on the micros. Since that hourly gap was so small, there's a high probability that NQ did fill that gap before, so it wasn't a fair value gap. As a rule of thumb, personally, I chart NQ, and then if I trade micros, I trade M and Qs, but I still look at NQ.
Same.
Unless you are close to a contract switch where they may move a little bit different and there may be some valid SMT between the mini and the micro contracts, I wouldn't stress about it too much. But since in this case, there are gaps that are taken into account, if there's such a small gap like this, there's a chance that on micros you'll miss it. But it's just one trade, so don't stress about it too much.
Yeah, I have the same. I have the same stipulations there. Same ones. Same ones.
Beautiful.
For MS sniper trades, my correlated pairs that I primarily focus on, it's gold and silver, euro and the pound, and NQ and ES. That's all I trade. Those three correlated pairs. Yo, Nick.
Nick's in the house. Let's
Yo,
go.
Nick. Yeah, I
I'm
have a
also gonna
video on my channel on high
um,
probability order blocks. Basically
someone's
anything.
asking. Sorry about that, Matt. I
No,
just
you're
want to
good.
clear this up quickly because Mr. Ghostbuster is really going for it. We have added backtesting markers to this, which for anyone who's not familiar with the model will just help you get in sync with it real quick. You can customize what they look like, but as you can see on the left chart here on the trade, there's like that little green diamond at the top that has a meaning to it. So TradingView is really peculiar with the way that it saves drawings. So since there's a lot of models, I cannot save them all. Exactly. There's someone just shared another one in the chat. Sorry, but just keep track of those. Those will basically function for you as like a little marker where you can go back into bot replay and kind of analyze the charts. Well, you see a lot of losses. Think about what was my bias? Was my bias correct or incorrect? Was I inside of a kill zone? Do I have to use a better time frame filter for this? A session compared to another session? That is the standard, as always, as you've ever backtested any model. This just makes it easy to do it because it automates the process. So just keep that in mind. I'm not gonna say anything about what you're drawing on chart for the sake of everyone because I've jinxed way too many trades today.
Cool.
Just leaving it at that.
And outside of kill zones, don't look for trades on Forex past 12 o'clock. Also, it's Friday. Touch grass.
Yeah. Facts.
Yeah. Trust.
All right. Let's do a last round here. Anyone has any more questions of any sort of nature?
For PMFX, that kill zone, like 130 to like 330, 345. Yes, the SMT prints when the order block is confirmed.
Exactly. All plots at once. And then if that order block specifically is invalidated, but the SMT isn't, you'll see how it kind of like updates if the SMT keeps, let's say, happening, or if it gets invalidated completely, meaning the other pair invalidates the SMT, then it will disappear automatically too. But I think someone was asking me earlier why like previous SMTs were still shown even though they were invalidated if the setup works out, aka goes to one of the targets or doesn't fail still, so it's not just winning setups, you'll still be able to retain that information so you can study the setups in the history. So even though an SMT is invalidated later on, it'll still give you the opportunity to, through the history setting, see them. So you can go in, study them, journal your trades if you're taking trades with them, and you don't have to always just go in bar replay and take out 2 hours of your day to find the setups again.
Yeah. 6E is, so if I monitor and I chart on Euro USD on forex.com, and I'll execute, like if I see a trade like for the pound, if I was able to execute on the pound here, I would have bought on pound futures and I would have sold when GBP USD hit my 1 to 2 risk to reward. So analysis on GBP USD and Euro USD, execution, Euro futures, pound futures. I'm assuming that's just showing a 15-minute untapped fair value gap there, EDP.
Correct. Just make sure that since you have a dark background, I know that there's some things that are dark drawings out of the settings that is auto, like from the default settings. Just make sure that those are not that, and then crank it up to 40 in history and see what shows up. You're on a lower time frame. Just keep in mind that there's gonna be maybe a little bit less setups, but if you still find issues, just open up a ticket as usual. You know the deal. You've been here for a while. Shout out to you. All right. We've been going for an hour. Matt, thank you for trusting us with your model. Thank you for taking the time to show the people and tell them about your model. I'm excited. There's going to be a lot of cool stuff happening. We already have some other stuff in the works for more alerts and stuff like this that we'll delve into. If anyone finds any bugs, do your man to a solid. Drop it into the bug report. I'll jump on it immediately. I already fixed one today. So I'm going to be there for you at the beginning. So help us out by helping you out, if that makes sense.
Please, any
And
feedback.
then, exactly, feedback, all of that. You guys know the drill. You guys know the drill. Thank you, KM, for sending it. And once again, since KM sent the message, big shout out to the Toodegrees team. Wouldn't be the same without them. We used to do this stuff, just Josh and I. Now we have a family of people. Shout out to them. Drop some love in the chat for Matt. Drop some love in the chat for the Toodegrees team. And then we can call it a day.
Yeah, thank you guys. Honestly, it's like a fucking miracle and a blessing. Literally amazing. And I'm so happy to showcase it with all of you. Big W's in the chat.
WWW. All right, gents. It's Friday. Don't do dumb things. It's 2 p.m. on a Friday. We had a crazy week in the markets. Don't make it crazier. Go touch some grass. Go hug your family. Go out on the weekend. Come back on Monday.
That's a good idea.
And we do it all over again.
Yes, sir.